So in single level price determination, first I will explain how the values will update. Single level price determination. In this single level price determination, the specific material price differences, yeah, and specific to material, either it may be raw material, either it may be finished goods, either it may be semi-finished goods. Here, specific material prices. Specific material price differences will be calculated. Specific material price differences calculated and determines which portion will be allocated to consumption and determines which portion will be allocated to consumption, and what portion will be allocated to consumption and what portion will be allocated to next level and what portion allocated to next level. Next level that will be determined at this single level, only specific to material. The variances will not be carried to next level, that is from lower level to higher level. Assume we are manufacturing some finished goods sales. Just showing the calculation of how the values will be determined. So finished goods sales. Assume we are to manufacture this one piece of finished goods sales. We are manufacturing 1 kg of finished goods sales. Okay. 1 kg. To manufacture this 1 kg of finished goods sales, we require SFGX 2 kg and assume some labor hours also. 2 kg. Assume some labor hours also. 2 hours. So now this SFG cost is, assume some 600 per kg, or this is for 500 per hour. 600 per hour, and that is 1200 will become 1000. 1200 will be SFG, material cost, labor will be 1000. So assume to manufacture this one, the total will be 2200 something. Anyway, no? This is for SFG cost. This is planning, whatever we are doing is planning. same way for SFGX also, we are manufacturing SFG. So 1 kg we are manufacturing. 1 kg we are manufacturing. You know this for SFGX cost is 600. 600 only I wanted there. And to manufacture this SFGX 600, so assume we require raw material X some 1 kg. So this costs some 100 rupees. How this 600 coming? I'm just entering some value. Here also some labor hour. Here also 1 hour 500 rupees. So assume this is 600 how became. These are all planned values. Okay. These are all planned values. Then RMX. Assume RMX is so planned rate, right? Here we have taken RMX is 1 kg is required for semi-finished goods X. We are purchasing from outside. Assume we are purchasing some 10 pieces, 10 pieces, 10 kgs. So this 10 kgs cost is, as per our material master, assume 100 rupees. Total material value is 1000 rupees we are having. Out of this, assume we are using only 1 kg for this semi-finished product. Now we will start actuals. This is on planned values. Now assume in actuals how the system will calculate in single level. We are in single level price determination. So in single level price determination, first I will take semi-finished product. Later we will go to finished product. First semi-finished goods. SFGX. Plan is for 1 piece. Assume here SFGX you are manufacturing 8 kgs. Okay. You are manufacturing 8 kgs. For this 8 kgs, we are using raw material X. As per plan 1 kg each, but assume just changing, we are using 9 kgs. Actuals may be differ, more or less. Maybe 9 kgs assume we are using 9 kgs. Total stock we are available is 10 kgs, but we are using 9 kgs. So 9 kgs, it will be as per plan values. It will calculate initially into 100 rupees 900. Next labor. Normally for 8 as per plan 1 hour each. Assume we are consuming 12 hours. As per plan rate 500 rupees per hour. This is 6000. Which is 6000. Okay. Now the value is 6900 for 8 kgs. But our plan rate, as per plan rate, 600 rupees per kg. But actuals, it came to 6,018. This is for 8 kgs. Right? But as per plan, what is the rate? Plan value. Plan values are for 8 kgs of total SFG, 600 per kg. 600 per kg. It will be 4,800. But when it comes to actuals, the price is different. This is minus this one. This is what we call it as a production variance, right? The production variance for this semi-finished product to manufacture 8 kgs is 2,100. This 2,100 we call it as a production variance for semi-finished product. Next one, we will go to finished product now. FGX, to manufacture FGX. Now the actuals. Assume you are manufacturing here 2 kgs. To manufacture this, we require SFGX. So normally 1 kg per unit only, 2 kgs we require. But assume you are consuming normally 2 into 2 4. But assume you are consuming 5 kgs. 5 kgs. And as per plan only, the system will consider plan rate only. SFG plan rate is 600 per kg. Right? So here 600. The price difference will not be rolled on to the next level in case of single level price difference. This amount it will not consider. 3,000. Next, labor. As per plan, normally 2 into only 1 kg, 2 hours per kg, 2 into 2, 4 is enough. 4 is enough. But as we are consuming more, some 10 hours into 500 rupees per hour. 500 rupees per hour as per plan. Assume this is 5,000. 5,000. The total is 8,000 now. But what as per plan value for this 2 kgs? What is per kg? Per kg is 2,200 per finished goods. It should be 2,200. The total 4,400. Now the whatever difference is, that is production variance. This is production variance. 3,600 is production variance. Production variance. $3,600 is production variance. When it comes to raw material X, the price difference is assume as per plan rate. As per plan, The material master we are having 100 rupees per kg. 100 rupees per kg. Plan value is 100 rupees per 1 kg. So we are having 10 kgs here, right? 10 kgs we are having 100 rupees per kg. 1000 is as per plan value. Assume the sender and the vendor has sent the invoice. Here also price difference is there. Now we send it as 120. 120. Now for 10 kgs. Okay, invoice price. Assume invoice price is difference is there. 400. So here 200 will be the price difference here. Price difference is 200. This is in case of raw materials. Assume in case of labor also, activity price per hour also. Activity price per hour, plan rate is 500 rupees per hour. For 1 hour, 500 rupees. Assume as per actuals, this value will come from cost center accounting 600. Here also price difference is there. So here 100 rupees we will get difference when we are reevaluating the activities. At the time of reevaluating activities, we will get this 100 rupees price difference. 100 rupees. This is in case of activity price variance. This is raw material X price variance. Assume when it comes to stock level, stock quantities. This is raw material X we are having 10 kgs. Raw material X we are having. Out of this 10 kgs, here we have used 9 kgs for raw material, semi-finished goods production. Stock quantity quantity 9 kgs are used. Right? In stock is only 1 kg. Presently 9 kgs are consumed or goods issued to production is 9 kgs. 1 kg is only available presently raw material stock. When it comes to SFG we are manufacturing 8 kgs. Out of 8 kgs we are consuming 5 kgs in finished product. 3 kgs are stock. We are consuming 5 kgs to the finished product. 5 kgs to the finished product. Consuming 5 kgs. And 3 kgs only available. Stock is available 3 kgs in stock. Assume in case of finished product also. 1 kg is sold, 1 kg is in stock. Assume in case of finished product also. 1 kg sold, 1 kg is in stock. Now how the PUP will be calculated in each case that we will discuss. PUP, price per unit, periodic unit price. For raw material X, for semi-finished product and finished product. First I will take raw material X. In case of raw material X, in single level, So raw material X price difference will be calculated as a 200 rupees per kg. So this price differences out of this 200, we have to distribute for consumption 9 kgs, in stock 1 kg, 1:9 ratio. This 200 price difference will be distributed between consumption and stock. What actually the PUP price? So raw material X price or PUP, periodic unit price. Here PUP price or raw material X price. What here we call it as a periodic unit price, PUP. Total PUP price will be calculated 1000 rupees plus plan value is 1000 plus variance is 200. Right? Variance is 200 divided by total stock is 10. 120 rupees is PUP price. And the price variance, this 200 price variance will be rolled up to the next level, because this 200, out of this 209 kgs we have consumed out of 10 kgs, right? Price variance rolled up to next level. Next level is 200, 9 kgs consumed, right? Into 9 divided by 10. Price variance added to stock is for 1 kg 200 into 1 divided by 10. This one is 200 into 1800, 180. Here 20 rupees. Right? These are prices the system will calculate at single level price determination for raw material X. For raw material X, periodic unit price is 120, price variance rolled up to the next level is 180, price variance added to the stock is 20. This is in case of raw material X. The same way, go to SFGX. Next I will go to the SFGX. In case of SFGX, PUP price, periodic unit price. For periodic unit price, as per plan value, we are having 8 kgs. Total quantity is 8 kgs. So this 8 kgs cost, when it comes to plan value, 600 rupees per kg. Then what is the price difference? Plus 2100 is the price difference. For total is how many kgs? Divided by 8 kgs. Plan value plus price difference divided by 8. That is PUP. So here, what will the cost? 4800 plus 2100. 6900 divided by 8 kgs. 6 8 862 6900 divided by 8. 6,900 divided by 8 gives 862. 862 is the price per unit PUP. Next one. Now we need to calculate what is the price variance rolled up to the next level. Rolled up to next level. So here the total price variance is 2100. So this 2100 we need to distribute between consumption 5 kgs, in stock 3 kgs. Rolled up to the next level is 5 kgs. So that will be into 5 kgs divided by 8 kgs. Total is 8 kgs. 2100 into 5 kgs divided by 8 kgs. Then it will be 10,500 divided by 8. 10,500 divided by 8. 1312.5. This is price variance rolled up to the next level. Next one. Price variance added to stock. We are having stock of 3 kgs. The value of the variance 2100 into 3 divided by 8. This one is 6,300 divided by 8. 787. This is price variance added to the stock. This is different prices for semi-finished product. At single level price determination, this is the price. Next, when comes to finished goods, the PUP price is as per plan value. For 2 kgs, 4,400. 4,400. For 2 into 2,200 is 4,400. Plus, for this we need to add the variances. 3,600. Variance is 3,600. And divided by total is 2 kgs. This is PUP price. Plan price plus variance price divided by number of quantities. Now the total is 8,000 divided by 2. 4,000 per kg is PUP price. Here the price variance rolled up to the next level. Rolled up is, so average price for 1 kg only we are using. The total variance is 3,600 divided by 2. 1 kg we are having in stock. 1 kg only we are selling. Then price variance added to stock. 3,600. Only 1 kg is there. 80. This is how the system will calculate different prices in case of single level price determination. PUP price variances added to the next level, price variance added to the stock. This is your single level. Right. Next I will show you at multi-level price variance. Next calculation is multi-level price variance. This is important. Multi-level.
Upendar, can just go through once again?
Yeah. So all values, this is the average price. PGP price includes plan price plus variance divided by number of quantity. Price variance added to the next level is whatever we have consumed price. Price variance into consumed quantity divided by total quantity. Price variance into consumed quantity divided by total quantity. Added to the stock, whatever the stock we are having. Price variance into whatever existing stock, closing stock divided by total quantity. In case of all the materials, formula will not change, same formula. Formula will not change, same formula. So the actual formula what SAP has given. So for our understanding, I have entered and correlated with our existing values. For this, actual formula is for PUP, assume PUP actual formula is cumulative preliminary valuation, preliminary inventory valuation, inventory value, cumulative preliminary inventory value, nothing but plan value, plan cost. Cumulative preliminary inventory value is nothing but plan cost plus cumulative price difference plus if there is any exchange rate difference. Cumulative, in our case I have not entered exchange rate difference. Cumulative exchange rate difference divided by cumulative inventory. This is actually a formula for PUP. PUP formula is cumulative preliminary inventory valuation plus cumulative price difference plus cumulative exchange rate difference whole divided by cumulative inventory. This is PUP formula. When it comes to price variance, rolled up to the next level. In this case, the formula is same. All differences, cumulative price difference plus cumulative exchange rate difference divided by cumulative inventory stock. Cumulative inventory stock. Cumulative inventory into raw material consumed. Inventory consumption. This is for price variance rolled up to the next level. Next level is cumulative price difference plus exchange rate difference. Total differences divided by total inventory into only inventory consumed. There is a formula for price variance rolled up to the next level. Next, price variance added to the stock. For this, the formula is same. Total differences, cumulative price difference plus cumulative exchange rate difference, cumulative price difference plus cumulative exchange rate difference divided by cumulative inventory into remaining stock only, stock available, remaining stock or closing inventory only. Total variances that includes cumulative price difference plus cumulative exchange rate difference divided by cumulative inventory into stock available, remaining stock. This is formula for price variance added to stock. No need to buy hard formulas, and just understand the logic so you can easily get these values. PUP is plan price plus variance divided by total quantity. This one is all variances proportionately distributed between consumption quantity and closing stock. Consumption quantity and closing stock. For all types of materials, same formula. Semi-finished goods, finished goods, and raw materials. Right? This is in case of single level price determination, how the system will calculate the prices. So in case of single level price PUP, single level PUP is not used for inventory valuation. In the single level, okay, this single level PUP not used for inventory valuation. Not used for inventory valuation. Another thing is here we can't roll up to the next level. Roll up to the cost are not rolled up to the next level. Cost not rolled up to next level. The raw material X we are not going to variances to next level. This is a basic thing what we are doing in single level price determination. Cost not rolled up to the next level.
So what is meant by cost not rolled up to next level?
This raw material X price difference is there. No? This 200 when we are calculating here. So this 200 price difference is there. No? Price variance of the consumption is 180. This 180 rupees no way it will reflect in the SFG. You know? 180 rupees no way. But how the raw material X is valued? 100 rupees. This is plan price, not actual price. Right? Actual price is 120. 120 per unit of raw material X is 120 per unit. But here we are considering as 100 rupees only. Quantity only changing here, but price is not considering. This price variance is not considering. That is what the costs are not rolled up to the next level.
Okay.
Okay, no?
It's just computing and it just doesn't get added to the next level.
Yes. This price difference 20 rupees will not be added when we are calculating semi-finished goods X cost. This 20 rupees is not added. Okay. Here also finished in case of finished goods. SFG value is totally 6,900, but we are for 5 kgs. But we are taking only 600 rupees per kg. As per plan rate only we are taking. This SFG cost also actual cost not rolled up to the finished goods calculation. But in the multi-level, if you are going for next scenario, this is single level calculation. Now we are going to next level, that is another concept, that is multi-level. Multi-level price determination. In this multi-level price determination, the cost will roll up. Here we will get this price. Activity price difference will be also calculated. In the single level only, even though labor price difference is also there, 100 rupees. No way the labor price difference will get effect in the material valuation. Okay? This is another important is activity price difference also. Activity price difference calculated. In the single level we have not considered labor activity price difference. This is important. Activity price difference will be calculated and variances will be rolled up. The price variances will be rolled up to next level. Now the raw material price variance, when we are using this raw material X in manufacturing semi-finished goods X, this variance also will be considered. And the semi-finished goods X variance, when we are using that semi-finished goods X in manufacturing of finished goods X, that variance will also consider. These variances are rolled up to the next level. The lower level price difference is rolled up to the next level until we reach end product. End product is finished goods. Right? Lower level price differences. Lower level price differences rolled up to the next level. Rolled up to next level until we reach end product. In between, if any different process also it will come. Here the activity revaluation. Activity prices are updating the activity revaluated price. The difference of plan and actuals will be distributed in the same level to the same level and also rolled up to the next level. Not only the material cost, activity cost also. Activity cost, revaluated activity cost, revaluated activity cost, distributed to same level and also rolled up to next level until reaches end product. This is related to activity cost. Not only the material cost, the activity cost also for the goods consumed and for the stock in closing stock. The closing stock also includes the revaluated activity price and the rolled up, the consumption values also will be added to the next level in case of activity prices. So here the system calculate PUP related to PUP. So PUP will be the final price. PUP is final price used for closing inventory valuation. Because this PUP is adding the lower level price difference also. Okay, this PUP is calculated, periodic unit price is calculated and is used to validate the closing inventory also. This PUP is calculating is the final price and it is used to calculate the ending inventory, closing inventory also. And PUP used as a standard future price. Future standard price. PUP next month future standard price. This PUP is used as a future standard price in this multi-level price variance. This is how the system will calculating multi-level price variance. So now we will go for calculations now. How the system will calculate the prices in case of raw material X, in case of semi-finished goods X, in case of finished goods X. Okay. So here the raw material X valuation will be separately and activities also, activity cost also we have to reevaluate. We have to reevaluate the activity cost also separately. First, materials we will calculate. So assume raw material X. So the raw material X. So presently, what is the situation in raw material X? I will take same example. This is raw material X. We have consumed 9 kgs. 1 kgs are in stock. Right? For this 9 kgs, what is the price variance here? So 180 rupees is rolled up to the next level. Here we have already calculated 20 rupees is added to the same stock. This is how we are entering here. So you can enter here like this. Same value. Raw material X. Raw material X case. In case of raw material X, 180 rupees is added to the next level. Next level means now this 180 rupees will be added to the semi-finished product. Now if you go to SFGX, SFGX is okay. In case of SFGX, what is the situation? These 5 kgs are in stock, 3 kgs are 5 kgs we have consumed, 3 kgs are in stock. Right? But here earlier is only 2100 only. It is considered as a price variance. This price variance is 2100. So for this we have to add this 180 rupees price difference also. This is rolling up to the next level. Means here in this 180 rupees also we have to distribute between these two 5 kgs and 3 kgs. So again here what happened, 180 into 5 divided by 8. This raw material X price also it should be add between closing stock and consumption, 3 divided by 8 kgs. 3 divided by 8 kgs. So then now what is the total price variance rolled up to the next level? This is the price variance. Here also the total price variance rolled up to the next level. This is stock. This is 1425 is it is rolled up to the next level. This is closing inventory value. It will change now. So this is how the system will calculate in the multi-level price variance. The price variance will be rolled up to the next level. Means the raw material X price variance will be added to the semi-finished goods X. This is earlier for semi-finished goods X. This raw material price variance 180 rupees also will distribute between this price variance of this 5 kgs are consumption, 3 kgs are in stock. So 5:3 ratio. 180 will be divided between 5:3 ratio. Now the actual price variance of semi-finished product will differ now. This is rolled up to the next level. This is stock level. These values will change now. Right? Now if you go to FGX, finished goods X, the same calculation. In case of finished goods X also. Yeah? So we are having 1 kg in stock, 1 kg in we have sold. 1 kg we have sold. Assumption is 1 kg we have sold and 1 kg is in stock. In this case, okay, this 1425 will be rolled up here. The difference, price difference is 1425 of semi-finished product you are using to manufacture finished goods X. So this 1425 will be adding here. So if you add here 1425, how many kgs? 1 kg only there by 2. 1 kg is rolled up to the next level. 1 kg is the final stock. So this rolled up to the next level stock divided by 2. Here also same thing. Average divided by 2. Only 2 pieces are there. So now these values also will change. Closing stock inventory will change. This is sold one. Next level means this is sold. Price value rolled up to the next level. There is no next level. Next level means sale price only. The value of actual cost is increasing now. This is actual cost is increasing now. Closing stock is 2512 and sold stock value also will change 2512. The price differences of lower level will be added to the next level. Right? This is related to multi-level. Up to now, only the material cost values only we have added. Up to now, what we have added is only material cost values. Now we need to add activity cost. How the activity cost value will be? As we have entered here, as per plan 500 is there, but actual 600 per hour is there. So 100 rupees difference is there. Per hour 100 rupees difference. So this, how many hours we are using? So for semi-finished goods X we are using 12 hours. For finished goods X we are using 10 hours. So here the prices also will change. In the single level price determination, we have not added these prices when we are calculating the cost. So these 1200 also will be rolled up. How it will be added, that we will continue next class. It will not finish in time. So we will continue that activity cost variances, how will be calculated. In the next class we will continue. Okay.